there might be stop hunting in the futures markets, but there certainly isn't in the spread betting companies can't stop hunt. I mean, I can't, to move the futures price or the FTSE price, for instance, or currency prices, to move them 2 pips would take 50, 200 contracts or 200 million pounds of currency trading just to move 2 pips. And you're going, what spread betting company is actually going to put itself into a 200 million pound position just to take a stop out of £5? I mean, in reality, the people who complain about this are always the people with like £5 positions or £1 position. You're going, look, I'm really sorry, but to get your £5 position, I'd have to commit £500,000 to take out your £5 position. So no, it's just not on. And if it did go on, you've got to remember that all the people in the spread betting companies are human beings. They're traders. They are regulated by the FCA now, and there is no way you could keep that kind of thing secret. So the traders would know. So next time there's a redundancy round, the traders would go, you make me redundant, I'm going to go to the FCA with this little tidbit of information. So, no spread betting company is going to do it. They would just have a ton of bricks land on top of their heads. So, no, it doesn't happen. But that doesn't mean everybody doesn't think that it happens, of course.
Good, lovely answer.
Manipulation of prices by spread betting companies. As I indicated in my last answer, the fact is, if a spread betting company did manipulate prices, people would know. The employees of the spread betting company would know, and then the spread betting company would be at the mercy of the FCA coming, as we've all heard with the LIBOR catastrophe and what was the one before that? And now there appears to be some manipulation of the fixings of the FX market at 2:30 in the afternoon. I'm not quite sure what exactly they're being accused of. I'm pretty stunned that anybody can manipulate the FX market. But the point being that if we manipulated, then people would know. And once anybody knows, then the world knows. In this day and age, Twitter and emails and everything. So no, it just doesn't happen. Now, that doesn't mean that a spread betting company might not bias its price to reflect the position it's got. So if every client it's got is selling the FTSE, so the spread betting company is building up a huge position, then the spread betting company might actually bias the price a bit lower. Say they're all selling a bit lower, so it's actually to the favour of the vast majority of their clients, to try and get some clients to start buying the market rather than selling it. I have to say at London Capital Group we never did. It was always the clean price, and if we had huge positions, we just went out and hedged them, and so let the market take the risk, not London Capital Group. But I do know that in times past it was the case that once positions used to get built up, you used to say, look, we want you to take your profit. We want some of you to get out of your positions because we've got too big. There's too much on one side of the market. But that's permitted the regulators specifically allow market makers to bias their price to a certain extent to try to attract people to take them out of positions. Rather like, I'm a stockbroker, I've quoted a client in Key Gulf Petroleum, whatever it's called, and he's hit me in 100,000. My price before was 110, 115. And the market is still 110.15, but my next price might be 108, 113, because now I don't want to get any more because I've just been hit with 100,000 of them. So I'm going to let the other people pick it up at 110, and I'm going to move my price down to 113. So everybody's going to look at my price and go, oh, I want to buy, I'll buy that 113. It's not, it's just biasing your quote to try to attract business on the other side.